Here at Multinet, as bond originators, we often are assisting new home buyers or property purchasers with pre-approval assessments in order to determine the maximum funding we can secure on your behalf through the various banks that we work with. Now, there are instances specifically at the moment where there are purchases happening or properties being purchased for the pure purpose of securing rental tenancies on these various properties. This means that you are going to be realizing a future rental income on the specific property purchase that you're looking to acquire. And how this is importantly noted in your pre-approval assessment is the fact that there is a future percentage of rental income that certain banks that we work with at the moment are willing to consider as part of the application process and being able to validate your affordability for the new home loan that you'll be taking up for this purchase. Now, this is very exciting because it means that these banks are recognizing that the rental market in South Africa, specifically in Cape Town, is very promising and can be used as a solid source to support the home loan repayment. And this is something that can be very helpful and useful in getting your application from where it would have been a declined outcome to an actual approval. You know, that's a big difference. And these are marginal numbers that can impact not only you actually securing the home loan, but in fact securing a decent interest rate as well. Because in this case, you'll go from not only affording a margin amount of the loan that you require, but you'll be affording much more than what you require, right? So how this forms part of the application process for us as bond originators that are supporting the application for acquiring a rental property investment purchase is that we will request from either the estate agency or there's a CMA property report system software that our office has access to, that we can download the information on rental values that can be used as part of the assessment process that we are going to now embark on to make sure that you can actually qualify for the home loan. And so the percentages we use are quite conservative because we're needing to determine, you know, that you are able to go ahead and sign on the dotted line, and you can confidently do so with a dependency of just a conservative percentage of the future rental income that we're looking at. So these reports that we have access to, we'll download for the property in line with the property address that you can disclose at the time of your pre-approval, and we can then use those figures to add a percentage of the rental income to your original affordable, you know, calculation. So for instance, if you're salaried, full-time employed, self-employed, you know, earning a pension even, you do need to still be able to present an income flow in addition to the future rental. So very important to note that it's not only the rent of the future rental income that we can place reliance on, it's also the other main income source that you are currently earning, and you can actually prove historical bank statements and records of that you are currently earning an income that can go towards the purchasing and financing of the new property. Also very important to note is that I've had a case recently where the specific applicant was looking to purchase, to rent his property out and still remain living with his parents. However, because he was seen as a first-time buyer, the banks were very apprehensive in taking future rental income into consideration for his specific application. In their sort of, you know, rule book, chances are that if you're a first-time buyer, you are purchasing to move into the property as your primary residence. So please do note that for first-time buyers, it is very challenging for us to convince the credit assessments and assessors that look at the applications at the various banks that we engage with to actually take in future rental income for your application specifically.